Once again, a very good afternoon to you all, dear students and sir. So welcome back, students. Hope you all have had your lunch and all set for the next session now. So we'll be continuing with the depreciation chapter. Over to you, sir.
Thank you, ma'am. Good afternoon, guys. Good afternoon. Good afternoon. Good afternoon. Good afternoon. Hope all of you are doing well. Hope all of you had your lunch. Good afternoon. All right. So before I begin now, what I will do is I'll just talk about some of your digits a little bit more. So please pay attention. Now I'll share the screen. Good afternoon. Good afternoon, guys. Yes. So this particular problem, I told you I directly took the addition of fractions. So can I do it independently also? Take your calculators and can you just help me out? I'm just breaking this problem for you. For the ones who don't know, who are not familiar with the concept of this, who did not understand the concept when I discussed earlier, for them I am going to just tell you why I did that directly, how I got. So 8,80,000 divided into 10 by 55. Can someone tell me what is the answer? 8,80,000 into 10 by 55. 1,60,000. What is this? What is this? Can someone tell me what is this? 1,60,000. This is the depreciation for which year? For the first year. Depreciation for the first year. Are you all comfortable with this? What is the depreciation for the second year? 9 by 55 into 8,80,000. 1,44,000. Then 8,80,000. What is 1,44,000? Depreciation for the second year, which is 2011. Second year, 1,28,000. This is the depreciation for the third year, which is 2012. They did not ask us to do all this. I'm just telling you. I'm just giving you information. 1,12,000 is the depreciation for the fourth year, which is 2013. And 96,000 is the depreciation for which year? For 2014. So these are the depreciation. You can add up these five amounts and tell me the total. Add up these five amounts and tell me the total. What is the total you get? It should be equal to 6,40,000. Say yes or no. Is the total equal to 6,40,000? Yes, sir. It is 6,40,000. So that is nothing but the total depreciation for year 2010 up till 2014. Instead of calculating one by one, what did we do? We directly summed up this numerators and we calculated the total. Okay. You can do it like that also. This is the shortcut. This is something mathematically you can do. We directly did it. Anyway, so that was about sum of years digits method. Can we just look at the methods? What in all methods we had to discuss? Now we had to discuss written down straight line method we've discussed, written down value method we've discussed. We've discussed sum of years digits method also just now. Now we're going to discuss machine hour method. Shall we discuss machine hour method and production unit method quickly? And also depletion method. All these three methods are in the same line. The embedded concept over this is the same. Okay, it is no different with regards to the basic concepts which are under those three methods. Now, before I start that, I'll just ask you a question. Under straight line method, what was that you calculated first? How did you calculate depreciation? Depreciation per what? Depreciation per annum, right? Per year. Depreciation per year or per annum you calculated. What was the formula when you said depreciation per annum? What is the formula You said historical cost minus salvage value divided by useful life in years. Why did you say in years over here? Why did you say in years over here? Because you were calculating per annum. You were calculating per annum. So you said depreciation per annum is equal to historical cost minus scrap value divided by useful life in years. So you had to calculate, you calculated per year. And if you had to say 1 year depreciation, if you have used the asset for the whole year, you directly write this amount, yes or no? If you had to charge that depreciation for 1 year, you directly write that amount. If you had to charge depreciation for 6 months, what would you do? What would you do? You would say 6 by 12 into 6 by 12. The depreciation per annum into 6 by 12 you would do. If it was for 7 months, how would you do? You would say into 7 by 12. So like this, proportionately you would charge, because this is depreciation per annum. Whatever depreciation we had calculated uh, as per the formula was per year. Now I will tell you that there is other ways also to calculate depreciation. Now what are the other ways to calculate depreciation? Similar methods these are, which is one, we call something called as production unit methods. Production units method. Now what do we do under production units method? This is not per year. Here we are going to calculate depreciation on the basis of units. On units. Now here, what was the formula you said? Estimated useful life. This was estimated, right? Estimated useful life in terms of years, you said. Now here also you will put the same formula, historical cost minus scrap value, which is nothing but depreciable value, divided by, this is not per year. Now we're going to calculate depreciation rate per unit. Depreciation rate per unit, or depreciation per unit you're going to calculate. So divided by estimated total production. Now we are going to write useful life only. We are going to write useful life only, but not in terms of years. Estimation will not be in terms of years. It will be in terms of how much, in terms of what? In terms of what? In terms of total production in units. I hope everyone is comfortable with this. So the estimated life, the life of the asset is now being estimated in terms of units that will be produced using that machinery, and not the years that the machinery will be used for. So this is how we calculate the rate per unit or the depreciation per unit in this particular formula. Now once we calculate this, we will get the per unit depreciation. Every year we have to charge this depreciation every year. At the end of the year, if you have to calculate the depreciation for a particular year, you have to multiply it with actual units produced. Multiply it with what? Actual units produced. As simple as that. Okay, so what is HC and SV? HC means what? Historical cost. SV means what? Scrap value. What is HC minus SC? What do we call it as collectively? What do we call it as? Depreciable value. Okay. Now coming back to our discussion. Yes. Coming back to our discussion. Per unit depreciation we calculate over here. Take that depreciation and multiply it with actual units produced. How many units you're producing actually in a particular year? Multiply it. Just like how we did over here. Here per year and per annum depreciation we calculated. If you're charging for the whole year, we multiply it with 1 because it is annual depreciation. We charge it. If we use it for 6 months, we do 6 by 12. If it is used for 7 months, we do 7 by 12. Because this is annual depreciation. But here, what have you calculated? You have calculated unit-wise depreciation. Unit-wise depreciation. So you multiply that unit-wise depreciation. If you have produced only one unit, directly write that depreciation. Only one unit during the year you produced. So directly into one. If you produced 10 units, into 10. You produced 5,000 units, into 5,000. So how many ever units you produced, multiply this unit per unit depreciation with the number of units produced, and you will get the annual depreciation. Did you all follow this? Easy peasy, right? Yes. The same principle or the same formula also is used in the case of machine hours method. Which method? Machine hours method. Now in the machine hours method, we don't calculate it on the basis of units. We rather calculate it on the basis of hours. Very good. We calculate it on the basis of hours. Now, same formula. First, we have to calculate something called as the depreciation per hour or rate of depreciation per hour. Now, depreciation per hour is equal to historical cost minus scrap value divided by estimated useful life or estimated total hours of production. As simple as that. We calculate the total production, we estimate the total production that the asset can be used for, how many hours that asset can run. You calculate that and you take it. For example, I know we are not aware of all this, but every asset, especially when there is some technology related assets and all, they have useful life in terms of hours used also. I was just doing a research about my laptop. I have a MacBook. So in the MacBook, there is a battery. This MacBook battery works in terms of percentage points. It is some 10 lakh percentage points or something. So after that, the battery will die. That is the useful life. So you can use it up till 10 lakh percentage points. That is what the company says. Okay, you can calculate the depreciation on that battery based on that estimation also. That is they are saying per hour, the battery life, how much does it come? It depends on your usage and all. But they say percentage points wise, they are telling you how much, how many estimated percentage points it comes for. So you can use so much in 3 years only, or you can use it for 10-15 years also. It depends on you. So the useful life of years is not relevant in such case, because it depends on how much battery you are using, how much MacBook or how much of your laptop is you are using in a particular year. It might vary from person to person. So in such cases, the depreciation is not that per year depreciation could not be accurate, would not be accurate in such cases, because it depends on how much you use this particular laptop. So it will depend on the number of hours and all. Might give you accurate figure is what I'm trying to tell you. But it is possible to calculate per hour also depreciation. That is when we do it under the machine hours method. Basically, we calculate depreciation based on the estimated total hours that machinery is going to be used. Okay. Then to calculate annual depreciation, can you guess the formula? Now we have got depreciation per hour. What should we do with this? We have to multiply this per hour depreciation into actual hours used. Actual hours used. As simple as that. Just like this method, just like the production unit method, there you were multiplying it with the units produced, actual units produced. Here we are going to multiply it with the actual hours used. So you will get the annual depreciation for a particular year. I hope everyone is comfortable with this. So this is the machine hour method. This is the machine hour method. Okay. One more method we have known as the depletion method. Can you guess what is this method used for? For what do we use this method? We have seen this term depletion before somewhere. Where do we use this method, depletion? Where is this term used? Very good. It was used in the case of land. In the case of land. So there we use this term depletion. This method is also used. Actually, it is a depletion method. We have to call it depletion, but we call it as a depreciation method because it is part of our depreciation chapter itself. This is used on land. That is natural land which has natural resources and which loses its value with usage of those natural resources. In the case of such land, we use this particular method. Now here also there is a very simple formula, very similar to machine hours and production unit. First, what we have to do is calculate the depreciation per ton or per unit. Per ton. Generally, it is tons. It is measured in terms of tons. But per unit, we have to calculate the depreciation or depletion. Now, because see, the land value is because of the resources over there. The value of that particular land, be it a quarry or be it a mine, the value of that land is because of the resources embedded in that land. Okay. So now we are going to calculate the depreciation also based on that unit only. As and when you take out the units, the value of the land come down. As and when you mine, as and when you extract some resources out of that land, the value of that land will come down automatically. So that is why what we do is we calculate the depreciation also based on that particular parameter itself. So here again, historical cost minus salvage value, if any, divided by estimated total extraction. How much you can extract during your license period or when you've taken something on lease. Generally these are leases. Okay, you take it on lease. So during the lease period, how much you can extract, that is to be considered as the denominator. So you will get depreciation or depletion per unit. And then for annual, we use the term depreciation itself for this also actually, although it's called depletion, but we also we use the term depreciation very loosely. So annual depreciation, how do we calculate? Can you guess? The same thing, boss. Depreciation per unit into actual extraction. Actual extraction in units. That's it. A step. That's all. That's all. These three methods are. Are they similar? Are they similar? Yes, they are similar. Only thing is the parameters are different. The units are different. In one, it was units. The first one, production unit method, we considered the units as the main parameter. And second one, we considered machine hours as the parameter. Third one, we are considering the extraction, that is tons embedded in the land, that as the parameter. Just the unit is changing. The method is same. The unit is changing. That's all under the three methods. So I will solve one question with relation to, I'll just tell you, this is, generally there will be no scrap value for natural resources, Shashir, that is correct. So minus SV is just for uniformity I've written, but generally there will be no scrap value in the case of land. In fact, there will be cost at the end. Okay, there will be cost at the end. Byproducts, yes, you can consider byproducts, but that is a different thing altogether. That is booked as income separately. We don't minus it over here. Okay, I'll do one problem. I will just discuss the amount of depreciation to be charged each year. You will do it as homework. The depreciation account, machinery account. The machinery account, you will do it as homework. Is it okay? Is it okay? I'll just discuss the numbers with you. It's a very simple problem, guys. Very, very simple, very jujube problem it is. A machine was purchased for 20 lakh with a useful life of 10 years with an estimated production of 5,000 per units. Can you tell me how many units throughout its life? 5,000 units per year, they have said. How many units throughout the life of the machine? 50,000 units. Very good. That is nothing but 5,000 units per year into 10 years. We're going to use it for 10 years. So 5,000 into 10 is 50,000 units throughout the life of that asset. Wonderful. and an estimated total 80,000 total production hours throughout its life. So production units, how many total estimated product? These are two independent things, okay? You can't follow both the methods, but they have given data relating to this also. How much in terms of production hours? Total production hours? 80,000 production hours. Should we multiply this with the 10? Should I multiply this with 10? Yes or no? We should not multiply this with 10. They have clearly given and an estimated total 80,000 total production hours throughout its life. Throughout its life, they have not given per year for production hours. Okay, only for units they had given per year, so we should not multiply with 10. The following data relating to the first 5 years is given. Drop the machinery account for the first 5 years if the machine is depreciated as per production units method, machine hour method. Independent cases, first we will discuss production units method. First we have to calculate depreciation per unit. What is the formula for depreciation per unit? HC minus HSV, historical cost minus scrap value, divided by total estimated production in units. How much is the HC in this question? How much is the historical cost of the asset? 20 lakhs. Have they given any scrap value of the asset? No. So if they have not given any scrap value, I will consider it to be 0. So 20 lakh minus 0 divided by total estimated production in units. How many units were estimated every year? 5,000 units per year. For how many years? 10 years. So that means 50,000. So could you please tell me what is the depreciation rate per unit? Rupees 40 per unit. Rupees 40 per unit. Now, I'll just roughly draw the machinery account for a couple of years just for reference. It's easy, right? This is production units we're following. First, to bank account, how much is the cost of the asset? The cost of the asset was 20 lakhs. At the end of the year, I have to charge depreciation by depreciation. How much is the depreciation? How many units did we produce during that year? Is it 40 rupees? Depreciation for the first year is 40 rupees, is it? That is 40 per unit. So can someone tell me what is the depreciation? ₹40 into 3,000 actual units produced. So you should always multiply by depreciation account. What is the formula for depreciation? I told you, I had this discussion, right? Here, production unit, annual depreciation is equal to per unit depreciation into actual units produced. How much is the actual units produced in this case? 40 rupees is the per unit depreciation. We calculated it already into 3,000 units. That is equal to 1,20,000 rupees is the depreciation for the first year. I hope you are understanding this. So this is nothing but rupees 40 into 1,20,000, sorry, 3,000 units. So which is 1,20,000 rupees. Can you tell me the book value? What is the book value of this asset at the end of the first year? What was that? 20 lakh minus 1,20,000. How much is the answer? Is it 2 lakhs? Or is it 20 lakhs? It's 20 lakhs, guys. What is the answer? This is where you do silly mistakes, right? Small mistakes. But you lose marks. So that is 18,80,000. 18,80,000. This is the book value. To balance brought down 18 80,000. Can you tell me the depreciation for the second year? Rupees 40 per unit. How many units are produced in the second year? How many units are produced in the second year? 4,000. So 4,000 into 40 rupees. How much do you get? 4,000 into 40 rupees. 1,60,000. Wonderful. Rupees 40 into 4,000 units, which is equal to 1,60,000. So could someone carry down? Hey, I'm not getting enough participation. What is wrong with you? Are you following? You're not participating in the chat. You're not talking to me enough. I'm feeling very, very, what do you say? Lonely is a very sad term, but yeah. Okay. Solitary. Voice is breaking, is it? Okay. So the answer is how much? What is the answer we got? 17,20,000 is the balance. So two balance brought down is also 17,20,000. Can you continue this? Can you continue this? Yes, you can continue this, right? Just tell me the depreciation amounts once. We will just calculate the depreciation amounts for each year. What is the depreciation amount for the third year? 4,500 into 40 rupees. 1,80,000. What is the depreciation for the fourth year? 5,200 into 40 rupees. 2,08,000. What is the depreciation for the fifth year? 5,000 into 40 rupees. 2 lakh rupees. Okay, 2 lakh rupees. So the book value of the asset must be at the end of the 5 years. Must be, can someone multiply this? What did you tell me for this? What is the answer for this? 40 is 1,80,000. This is the depreciation. This is into 40, 2,08,000 into 40. This is 2 lakhs. So the total of these three is how much? This is, I'm telling you the final answer. The total of these three is how much? 3 lakh, 5 lakh 80, no, this is, yeah, 5,88,000, is it? Yes. So 17,20,000 minus 5,88,000. 17,20,000 minus 5,88,000. That is your final answer. Last year, the book value must be 11,32,000. All I did was this amount minus the 3 years depreciation. You should get the book value at the end. After 5 years, you must get this book value. This is homework. I think you can do it. Very simple. Every year, just keep charging depreciation every year. Yes. Can I go to the next method? Can I go to the next method? Yes. So the next method is machine hours method. Now under machine hours method, I'll remove this because I don't have space. So I'll just remove this and write over here only. Under the machine hour method, we have to first calculate the depreciation per hour. What should we calculate? Depreciation per hour. How to calculate depreciation per hour, sir? Historical cost minus scrap value divided by estimated total production hours. So could someone tell me what is the historical cost minus scrap value? Here it is 20 lakh only. There is no scrap value. What is the total estimated production hours? They have directly given 80,000 total production hours was expected. So can you tell me what is the total depreciation? Sorry, depreciation per hour. What is the depreciation per hour? It is rupees 25. It is rupees 25. Now, can you tell me the amount of depreciation for each year? This you can do, right? I'm not going to draw up the account. Machinery account, you have to write 2 bank account first, 20 lakh rupees. Every year you have to charge depreciation. How much is the depreciation for the first year? Into 25. 1,62,500. Is that correct? 1,62,500. Next, how much is it? 7,000 into 25, 1,75,000. Next, how much is it? 8,000 into 25, it is 2 lakh rupees. 7,600 into 25, it is 1,90,000 rupees. 8,500 into 25, it is 2,12,500 rupees. Can someone tell me the total just to confirm our answers later on? I'll tell you the last book value after 5 years, how much you should get book value. I'll tell you that also now only. How much is the total? 9,40,000. So the book value after 5 years, you have to draw for 5 years, right? Book value after 5 years must be 10,60,000. The book value must be how much? 10,60,000. How did I get that? Historical cost minus depreciation for 5 years. Depreciation till date, that is for 5 years. The depreciation amounts were these. So the book value, this is how much you're depreciating over 5 years time. So the book value left after 5 years depreciation is 10,60,000. It is nothing but 20 lakh minus 9.4 lakh, which is 10,60,000 you must get at the end. Did you understand the logic? Look at this, how practical it is. We kind of sell ourselves to the whole accounting. We have to write this, write that, write this, write that. But we don't look at the concepts. It's a very simple concept actually. So the book value, the balance carried down at the end of 5 years must be 10,60,000 rupees. Make a note of this and please solve it on your own. I think you can solve this. Easy problem it is. Okay. Now, next one is change. When we change something, change in the. Can you tell me what is depreciation? What is depreciation? Is it an accounting concept, accounting principle, accounting policy? What do we call depreciation as? It is an accounting policy. Wonderful. It is an accounting policy. We call it an accounting policy. Why do we call it as an accounting policy? Because you have multiple options, you have multiple methods over here. In depreciation, we have different methods. When I discussed accounting policy also, I told you one of the examples for accounting policy is depreciation methods. Now, consistency convention says, the convention of consistency says that once you follow an accounting policy, we must continuously follow that same accounting policy year on year without changing it. Yes or no? We cannot change the accounting policy. We have to uniformly follow the same accounting policy. But I discussed this also. You can change accounting policy under how many circumstances? Under how many circumstances can you change an accounting policy? You can change it under 3 circumstances. How many circumstances? 3 circumstances. I gave you a shortcut to remember also. What was the shortcut I gave you to remember? LAB. I gave you a shortcut to remember, which is LAB. What is LAB? If it's required by law. A, if there is a change in accounting standard. And the third one, B, if it results in better presentation of financial statements. So we have 3 circumstances where we might change the accounting policy. Okay, the method may be changed. So what am I discussing over here? I am discussing change. So when I said change, I told you now the accounting policy, that is the method. Method of depreciation might change. Method of depreciation we may change. Not just method of depreciation or the accounting policy you might want to change, but sometimes what happens is, please pay attention to what I'm discussing. You make some estimates at the beginning. Yes or no? You make some estimates at the beginning. What are the estimates you make? What are the estimates you make? Think of SLM method and tell me, what are the estimates you make? You make estimates with relation to useful life of the asset. Useful life of the asset, you make an estimate. What other estimate you make? A scrap value also you estimate. It is estimated scrap value. You don't know how much is the scrap value after the useful life. We're just going to estimate. We're going to take the Gujri values today, kilo 10 rupees or 15 rupees, we consider it and we multiply it with number of kilos expected and we say this is the estimated scrap value. This is something that we don't know certainly. We are estimating it, we are approximating it, we can be wrong. Even useful life, we may be wrong. It's an estimation, it's not accurate. Now, this also might change. The estimations also might change. It could be change in estimated useful life, or it could be change in estimated scrap value also. There could be change during the life of the asset. Sometimes we revalue the assets also. So the change in the book value is also possible. We revalue the asset also. Can you tell me in which case do we revalue the asset? Partnership, admission, when there's reconstitution of a firm, we revalue the assets. Correct. In the case of partnership, when there is reconstitution of a partnership firm, that is admission of a partner, retirement of a partner, death of a partner, we might want to revalue the assets also. So in such cases, the book value, the value of the asset itself is revalued. It is revalued, although it is not as per the principles mentioned in the accounting standards, but theoretically it could be possible again. Once you revalue it, you have to get it back to the old figures as per the accounting standards. You can't keep it at the new figures or new numbers in the books of accounts. So there could be changes with relation to these things. One is the accounting policy, estimated useful life and estimated scrap value. Now, we will discuss about these two things first. When we change the estimated useful life, or book value also will include in this discussion and we'll talk about this. So when there is a change in estimated useful life, estimated scrap value or book value, how do we do it, sir? We always do it something called as prospectively, that is for the future. I will give you one example, numerical example we will take. We purchased an asset for 1 lakh. We said the useful life was 10 years. How much is the useful life we estimated initially? 10 years. No scrap value. Okay. No scrap value. And this was the historical cost. Can you tell me what is the depreciation per year? It is going to be direct 1 lakh minus 0, no scrap value, divided by 10 years. So that is equal to 10,000 rupees. So the amount of depreciation every year charged would be 10,000 rupees. Now, after charging depreciation for 5 years, after charging depreciation for how many years? 5 years. I revise my estimated useful life. I'm revising or I'm changing my estimated useful life. Actually, after 5 years, how many years more are left? 5 more are left, right? But I am saying no, I can use this for another 10 years, let us say. A total of 15. I've already used it for 5 years. And after using it for 5 years, I realized this asset is gattimuttu, solid. I can use it for another 10 years. Now, when you change like this, the amount of depreciation also must be changed. The amount of depreciation is also to be changed. Can you tell me, as on that decision, when did you take that decision after charging depreciation for how many years? 5 years. So what was the book value of the asset on the date of change? Book value on the date of changes. Sir, what is book value? The cost minus depreciation charge till date. The cost was 1 lakh minus I was charging depreciation every year. How much? 10,000 rupees. How many years did I charge as per this estimation? Only 5 years. So 1 lakh minus 10,000 into 5. So how much do you get this as? How much is the book value on the date of change of useful life? 50,000. Are you all following? 50,000. Now we have to spread this 50,000 over the new useful life. What is the new useful life? How many more years I am telling? 10 years. I am telling 10 more years. So what we have to do is new depreciation is equal to book value on the date of change in useful life divided by, if there is any scrap value, we will have to minus that scrap value, but if there is no scrap value, nothing. If there is any scrap value given in the question, we have to minus it, right, for depreciation calculation, divided by remaining useful life. Remaining useful life as per new estimation. So in this question, can you tell me how much is the book value of the asset? Book value on the date of useful life, I told you 50,000 rupees. So 50,000 rupees, there was no scrap value, divided by remaining useful life. How much is the remaining useful life? 10 years is the remaining useful life. So what is the amount of depreciation? The new amount of depreciation is 5,000. So if you calculate what has happened for the next 10 years, you're going to charge 5,000 each. So what is the total depreciation that you're going to charge for the next 10 years? 10 years into 5,000 is equal to 50,000 rupees. So at the end of the 10th year, that is the 15th year, total 15 years you get. At the end of the 15th year, how much will be the book value of the asset? 0. The book value of the asset will be 0, because that is the scrap value. There is no scrap value. The scrap value, I did not tell you anything. It was 0. So that is why it will come down to 0. So it will be under, don't worry, for your exams, the change in method for this one, change in useful life will be straight line method only. Written down value method, we don't study the formula. So the formula is not part of your portion syllabus. So you will not get a question on written down value method for this kind of problems. It will be for straight line methods only. It is for calculation of scrap, new depreciation you're considering over here. You have to minus the scrap value also over here, because can you depreciate? My question is, can you depreciate the scrap value? Can you depreciate the scrap value? The answer is no. You should not depreciate the scrap value. It must remain over there. After 15 years, it must remain over there. When you're calculating also, it must remain over there. Now let us say you're saying the scrap value, you would realize that the scrap value is not 0. The scrap value is not 0. You're revising the scrap value also. You're saying after 5 years or after 10 years, that is after using it for 10 more years, total of 15 years, there will be a scrap value of 5,000. So what is your new depreciation amount in such cases? What is your new depreciation amount in such cases? There is a scrap value of 5,000 rupees, I'm telling you. How much is the depreciation? 4,500. Can you tell me how much is the total depreciation you charge for 10 years? 4,500 into 10. How much do you get that as? 45,000. Is there going to be some amount left in the asset account? Yes. How much is going to be left in that asset account? 5,000 rupees. Why is that 5,000 rupees still left? Because it is scrap value. So you can't depreciate the scrap value. That is why you minus the scrap value over here also. You can't depreciate the scrap value. The scrap value must be left out in the asset account. I hope everyone is getting what I'm saying over here. Yes. Now, here also one more point I will add. If there is change in scrap value, just now we changed the scrap value also, right? Initially, how much is the scrap value? I told you. What was the scrap value initially? 0. Then I changed the scrap value to what? 5,000. So that is change in scrap value. Same way you have to do. It is nothing different. We will do a problem, shall we? Okay, this is revaluation amount. Even in the case of revaluation, it's the same thing. I'll explain with numbers how do we depreciate when there is revaluation of the asset. Look at this question. Question number 7. A plant and machinery costing rupees 10 lakhs is depreciated on straight line assuming 10 years working life and zero residual value. Quickly tell me what is the uh, amount of depreciation per year? 10 lakh divided by 10 years. This should happen. Quickly it should happen. 10 lakh divided by 10 years, how much is it? 1 lakh. For 4 years. Okay, they have charged depreciation. What have they said? For 4 years, they have charged depreciation like this. At the end of the 4th year, the machinery was revalued upwards 40,000. Okay. At the end of the year, wait, don't do garbadi. At the end of the 4th year, that is before charging depreciation for the 4th year, before charging depreciation for the 4th year, they have revalued the asset up by 40,000. The remaining useful life was reassessed at 8 years. Calculate the depreciation for the 5th year. Are you all with me? Can we do this problem together? Okay. Now, first tell me, how much is the depreciation for 4 years? Also, they have charged. Let us take it like that. For 4 years, they have charged depreciation. What is the original depreciation? You told me depreciation per annum is equal to 10 lakh minus 0 divided by 10 years. How much you get that as? 1 lakh. 1 lakh. They have said that they have charged depreciation for 4 years. Okay, that is why I'm taking it as 4 years. 4 years, they have said that they have charged depreciation at old values only. Although they have given at the end of the 4th year, this is after charging depreciation because they have clearly mentioned that it is for 4 years. So, can you tell me what is the book value of the asset after charging depreciation for 10 years, for 4 years? 10 lakh minus 1 lakh into 4 years. Can someone tell me what is the amount? Book value is 6 lakhs, right? 6 lakh. Now they have, what have they done? Upward revaluation or downward revaluation? Upward revaluation. Upward means should I add or should I minus? I have to add. How much should I add? 40,000 is to be added. So the new value of the asset is 6 lakh plus 40,000. It's just 6 lakh 40,000. 6 lakh 40,000. Are you all comfortable? Are you all following this? Now, what is the new depreciation amount each year? At the beginning of the 5th year, 6 lakh 40,000 will be the book value. That is correct. How many years should we charge this depreciation for? Depreciation is equal to revised book value or revalued figure, revised book value divided by revised useful life, that is remaining useful life. How much is the remaining useful life? How many more years are there? The remaining useful life was reassessed at how many more years? 8 more years. 8 years. So that means revised book value is 6,40,000 divided by 8. What is the new depreciation? What is the new amount of depreciation? It is 80,000 rupees. Are you all following this? Yes. There's one similar question as homework. Can you do it now quickly? Question number 8. I want you to do it now and tell me the answer. It's a very similar question, Natas. I've got answers. I've got 6, 7 answers. Depreciation for the 4th year is. Can you tell me how many years have we charged? First of all, what is the depreciation per year? Original depreciation per year? 1,20,000. How many years have we charged that depreciation? 3 years. 1,20,000 into 3. 3,60,000. So what is the book value before change? That is 12 lakh minus 3,60,000. How much do you get that as? 8,40,000. Very good. 8,40,000. 8,40,000 plus how much addition and value? 60,000. 8,40,000 plus 60,000 is 9 lakh. 9 lakh divided by 9 years. So what is the amount of new depreciation? 1 lakh rupees. Have you understood this? Yes. Okay. Now there is this interesting problem on change in method of depreciation. Before that, can we talk something else? A little bit different. We will talk some motivation or something. Shall we? Yes. Can you guys tell me what difference do you find between online and offline? There are many of you who have attended my classes offline also. There are many who listening online also. If I know different, I mean, you haven't attended offline. Some of you have, right? Yes. Here, when it is can't speak with me, correct? There's lack of interaction. That is I understand. And also, there is one more problem. There are two things. And it happens like this. Student point of view, I'm not talking about the classroom. I'm talking about the effectiveness. How it works effectively. See, there are two kind of students. Generally, I see in the classroom. I've seen now around. It's been so many students I've seen online itself. I've seen probably 1,000 students or more I have interacted with. But offline, I have interacted with much more. More than 2,000, 3,000 students. So what I have noticed is there are two kinds of students I have seen. Serious students. I don't talk about the ones who are not serious, the ones who have just come here because of, just there was some initial infatuation towards the course. There are people who come like that, but they go off also that soon only. I'm not talking about them. I am talking about, students who are serious, who come. Most of you are serious for sure. So most of you are serious and you listen and you come here to learn. So there are two kinds of students. One is someone who is very motivated and who wants to listen and understand every word of what is happening in the class. For them, I think this is the best. This is the best mode of understanding. Yes, I know. Anup, you're one of them. This is best for people like those, because what happens here, there is no one near you sitting and troubling you. You're motivated by yourself, you want to listen. And that is why people like that, who are shy to ask doubts in the classroom, will ask doubts over here, and they take full benefit of things like this. They are not shy. If it is real classes, they probably are a little shy to come and ask me, or they're scared because I'm a little, what do you say, bulky. But they don't come and ask me directly. I have noticed this. But here they ask, questions very, very nicely, and they get into depth. I also enjoy teaching here. I learned a lot over here also. So what I have noticed is students like those have taken complete benefit. And in fact, if they had attended offline classes, they would get 17 accounts. Now they can get 85, 19 accounts because of the interest they have shown, and because of the enabling factor that is online and this messaging which happens direct interaction real time. They have taken complete advantage of it. Those students are going to score 10, 15 more marks per subject for all the 4 subjects. This is one observation I've had about those kind of students. These are not all. I'm not talking about all. I'm just talking about mindset, attitudes, and what kind of students these are. I mean, I'm just categorizing it on the basis of the mindsets. So these students have suddenly shown more interest than they would show offline, which is a very good thing for them. And these guys are going to score great marks, more than how much they would have scored otherwise. So it has worked in their favor very well. But that is, I wouldn't say that is a minority. I would say that is around 20% or 30% of the total students. It is a minority, but it is not like very low also. It is 20 to 30% of the interested students in the class. Interested students, not the ones who come for attendance. Interested students in the class. The ones who are really passionate and want to become chartered accountants. So for them, it has helped them a lot. But there are others. Probably I would have been the other category, who are not exactly motivated on their own, who look at their friends and get motivated, who look at their group and get motivated. For them, it is more about people sitting together and, he's listening, I also have to listen. She's listening, I also have to listen. She will pass, I will not pass if she, it will feel bad. I will feel bad if I don't clear and all my friends clear. These guys go because of this negative motivation. It's not positive motivation, it's negative motivation. You're scared of failing. You don't want to pass, but you're scared of failing. So there are a bunch of students like that also. And most of us are like that, I feel. So this is because, because of, for such students, this has been a very bad thing. If you're not, I don't know, you have to push yourself. Many of you push yourself, but many of you are not able to push yourself. You kind of come to the class and you casually, you do not understand something, you do not get something. It's very easy now, right? You just close the app. I call, no offense to you guys, but I call your generation, I have a name for your generation, probably mine also. We are TikTok generation. We like short stuff. We like short duration stuff. Everything must happen in 30 seconds. That's why TikTok was a hit. We don't like 3-hour movies anymore. We want entertainment quick entertainment. Within 2 minutes, everything must be done. So we don't have patience levels. We don't have understanding levels. We don't have that mindset to sit and understand. And we don't find the need also for that, because so far in our life, everything happened in a snap, and it is happening in a snap now also. You want to read an article, that's why, news applications like InShots, you have heard of this news application, mobile application called InShot. That is a hit. That is because of this very mindset. Twitter is a hit for news. People go to Twitter to see news, because it is within 140 or 280 words, the news, you get what it is. You don't have to read a newspaper, right? So this is because of short stuff. We want everything in the snap. We don't have patience. But when you're into academics, trust me, it doesn't work out like that. Look at the books behind me. It doesn't work out like that. When you're in a syllabus, when you're doing something like a CA, a course like a CA. Unfortunately or fortunately, it doesn't work like that. You have to have patience. This is not TikTok. You have to have patience. You need to have that pushing skill, or it could be inbound, or it could be some motivation could be from somewhere else, but there must be that motivation to sit and listen. Only then you will clear. And I have seen this one more attitude. Probably I've experienced it more than I have seen it. I have personally gone through it. Listening to the faculty, and then something we don't understand, we're like, okay, it's okay, let's go to the next one, let's forget about the previous one, we will go to the next one, and after the class I will check it out on my own and I will understand what he did. I will read it. This is what I tell myself, and I just switch off. I switch off my listening ability, and I don't focus. Whatever he is writing on the screen, I will take it down. I'm not going to put efforts to understand, because I've told myself I will see it later. But that later doesn't come. That later never comes. That is a problem again. Right? There's so many things we skip. We say later, 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 later. And at the point of the exams, you realize, oh, okay. I've not done the most important part, only we've not done. It is too late at that point of time. So these are the mistakes that people do. Don't do those mistakes. I'm telling you, have a very positive attitude. Have that patience, build that patience. It won't come at 17, 18, 19-year-olds, don't get it. But you see the ones who are clearing, the ones who passed, your seniors, your friends who passed, are the ones who have patience, are the ones who are sitting for long and studying. Not just foundation, even intermediate, you can see those only pass. There's no shortcut to clear these exams. Probably foundation somehow you can get through, but when it comes to the next levels, for sure, the filtering will happen based on the ones who have the patience, the ones who have that skill of sitting and studying, all listening. It will only be based on that. You need to have patience. Look at me, that's right. Look at me, patience. I was not this patient when I started the course. Of course, I was like any other teenager. But things change. You have to change with time. You have to change with time. So don't keep giving historical examples saying that I have not done this before. Will I be able to do this now? No. Have you ever done CA before this? No, right? This is the first time you're doing CA. So don't have that kind of attitude. Please make the transition as soon as possible and work hard. Don't compare yourself with anyone. But at the same point, look at the ones who passed and see what right they did, and see if you are doing it. I'm not telling you to compare, but I want you to build a discipline, take some policies, take some inputs from others who passed, the ones who've been successful, the ones who've cleared these exams. Take inputs from them and see how they have studied. And don't keep small limits for yourself. Don't just focus on passing. I'm sure most of you at foundation level can score great marks if you are not lazy, if you're not indisciplined and all that. So be positive with regards to your mental mindset, your attitude towards the course. And remember, you are here to do CA, nothing else. Chartered accountants, if you look at any chartered accountant for that matter, everyone has become a CA by studying, by reading, by studying, referring ton of books. Everyone becomes a CA that way only. You can ask any chartered accountant, everyone's a nerd. So you become a CA like that, and it's worth it. I'm not saying it's a punishment. It's worth it. It's definitely worth it. So you will have to work hard. You will have to put a lot of efforts from your side. There's no lies in this, but you can do it smartly. You have to do it smartly, and focus in the class as much as possible. Focus in the class as much as possible, and only one thing in your mind right now, that you want to be a chartered accountant. I always say it's very easy to fail in these exams. It's very easy to fail. Common mistakes we do and we fail. All of us do some common mistakes. Everyone is doing that mistake. I'll also do that mistake, like that. Everyone will fail. As simple as that. If you are saying that, okay, my friend is not listening or my friend is gone, I'll also go. He will also fail, you will also fail. That's all. Here there is nothing like more will pass. 80%, 75 to 80% of us fail, right? In these exams, only 20-25% pass. So that is how it is. So don't take too much inspiration from your friends, because at the end all of you might fail. So that chance is also there. So don't let that happen. Be positive, work hard, look at your own preparations, and please keep working hard. Put your head down and keep working hard. I'm sure it will happen. Okay. Now, change in method of depreciation. Yes. What we'll do is we'll take a quick 5 minutes break, and after the break at 3:10 sharp, I will start. Hello. Yes, Lakshmi, look at them. Hi, hi, hi. Can we start? Can we continue our discussion? Yes. Now, change in method of depreciation. This could be a possible 10 marks problem, okay? Change in method of depreciation. Yes. Now, what do you mean by change in method of depreciation? Change in method of depreciation means we've been following one particular method for a few years and then we shift over to some other method. For example, I was following SLM method for the first 3 years, let us say. For first how many years? 3 years I was following SLM method. Then from SLM method, I'm going to shift to WDV method. Let's talk with numbers. Let's say I had bought a machinery for 1 lakh and I was following SLM at 20% amount rate of depreciation. Rate of depreciation was 20%. After 2 years of depreciation, after 2 years of charging depreciation, I'm going to change the method from SLM to WDV. Can you tell me what is the book value of the asset after charging depreciation for 2 years under SLM method? Under SLM method, we charge depreciation for how many years? I told you 2 years we charged at 20%. 20% rate of depreciation on 1 lakh rupees is how much? 20,000 rupees. So 20,000 rupees plus 20,000 rupees for 2 years is 40. So the book value of the asset after 2 years is how much? 60,000 rupees. Book value of the asset after 2 years is 60,000 rupees. Now you have changed the method of depreciation from SLM to WDV and you are saying the rate of depreciation is 25% under WDV method. What is the rate of depreciation under WDV? 25%. Now there are two ways of doing this. Okay. What are the two ways of doing this? The change in method of depreciation. Number one is retrospective effect till the last attempt. In fact, till the attempt before that, even one exam question was asked on retrospective effect. Even in an RTP, there was one question, which was a retrospective effect. What do you mean by retrospective? Can someone tell me what is retrospective? From the beginning, you change it. From the beginning, you change it. But in 2018, there was an amendment in the AS 10, Accounting Standard 10. Okay, what is Accounting Standard 10 saying? This is accounting for PPE. AS 6 was removed and accounting for PPE was introduced. Ever since this PPE, this is basically accounting for PPE is adopted from IFRS. Are you all with me? This is from global standards itself. Before we used to have AS6, which was an Indian made, ICI made accounting standard. What is PPE? What does PPE stand for? I told you what is PPE initially. What is PPE? Plant, property, or property, plant, and equipment. Property, plant, and equipment. Which is fixed assets. Okay, it is fixed assets only. Property, plant, and equipment. It stands for property, plant, and equipment. Now, before we used to follow AS6, and AS6 used to say if there is a change in method of depreciation, you have to do it what? Retrospectively. In India, we follow this principle of retrospective very, very seriously, and they said even for this retrospective effect is to be followed. But now, ever since AS10 has been introduced, under AS10 they say you have to follow the method of depreciation prospectively. The option for retrospective has gone off. Okay, but in the RTP of November 19, that is the last attempt or some mock test paper, I saw a problem which they had asked for retrospective. But for your attempt, this attempt, don't expect a question on retrospective. Like the question will be on prospective only. There is that's completely gone. The retrospective effect is completely gone. Just concentrate on prospective itself. In PPE, it is prospective effect itself. Now, what is by prospective effect, sir? I'll give you an example for this one only. I'll tell you how retrospective works, how prospective works. Both of it I'll discuss. If I was following retrospective method, what I would have to do is I would have to restate my or revise my book value. What is the book value right now? After charging depreciation, what is my book value? 60,000 rupees. If I said I had to do it retrospectively, what we will have to do is calculate the book value as per the new method starting from the beginning. That is 1 lakh minus 25% for the first year, minus 25% for the second year. How much do you get that as book value? 1 lakh minus 25% minus 25%. 56,250 rupees. Is that correct? 56,250 rupees. So before charging depreciation, we have to restate. This is retrospective. This is not what we're concentrating on now. We have to restate the book value from 60,000 to 56,250, and then we have to start charging depreciation as per the new method. But now what we're going to do is prospective. Prospective is very simple, very easy. Prospectively, what we do is 60,000 into what is the new method? WDV at what rate? 25%. So directly start calculating on 60,000 itself. 60,000 into 25%, how much is the answer you get? 15,000 is the depreciation for this year. So that's all we have to do. And the book value is 45,000 at the end of this year. I hope you followed this. Shall we do a problem on this? See, this was the RTP problem which had retrospective in this. But that is gone now. It is gone now. It is prospective only. Look at this question, please. This is a very good question. Mark this very important. Green Channel Company purchased a second-hand machine on 1st January 2015 for 1,60,000. Overhauling and erection charges amounted to 40,000. Can you tell me the cost of the asset? How much is the cost of the asset? 2 lakh rupees is the cost of the asset. Another machinery was purchased for 80,000 on 1st July 2015. Okay. Next, on 1st July 2017, the machine installed on 1st January 2015 was sold for rupees 1 lakh. On the same date, another machine was purchased for 30,000 and was installed on 30th September 2017. Under the existing practice, the company provides depreciation at 10% per annum on original cost. However, from the year 2018, it decided to adopt WDV method and to change depreciation at 15% per annum. Prepare the machinery account in the books of Green Channel Company for the year 2015 to 18. Can we start doing this problem? In the books of Green Channel Company. Machinery account we have drawn, and when was the asset bought? Now can you tell me, is this financial year or calendar year? Calendar year or financial year? What is this? What should we follow? We have to follow calendar year. We have to follow calendar year. That means Jan to Feb. Jan to December. Jan to December is what we followed, because they have said for the year 2015 to 2018. They did not say 2015, 16 to 18, 19. Did they say like this? No. This is how we use the terminology when it is a financial year. We say 15, 16, 17, 18, 19, 20, 20, 21. So like this we say. Now which accounting year is going on? If we are talking about financial year, we are talking about 2021. The current financial year is 2021. So it starts on April 1, it ends on April 1, 2020 it started. It is going to end on March 31, 21. So that is the financial year. So we call it like that, 2021. But this is not like that. This is calendar year itself. Okay. Shall we start now? Yes. First, on which date did we purchase? 1st January 2015. To bank account. How much did we purchase? What was the cost of the asset? You told me 2 lakh rupees is the cost of the asset. So that is nothing but 1,60,000 less 40,000. So that is 2 lakh rupees. Is there any transaction in the year? Is there any other transaction? Yes, there is a purchase of a new asset, right? Another machine was purchased on 1st July 2015. So we have to write that also to bank account. What is the cost of the new asset? 80,000 rupees on 1/7/2015. Okay. So let's start depreciation for this year. Which method have we followed? Under the existing practice, the company provides depreciation at 10% per annum on original cost. From which year have they changed? From 2018 they have changed. But up till 2018, that is 2015, 16 and 17, we have to follow which method? SLM method. For 15, 16 and 17, we are going to follow SLM method. So can someone tell me, very good Nikita, what is the depreciation amount we've got? There are two assets with me now, 31/12/2015. I have to calculate machine 1 and machine 2 we have. Machine 1, what is the cost of the machine? 2 lakhs. Should we calculate depreciation for the whole year or should we calculate it for part year? We have to calculate it for the whole year. 2 lakh into 10% into, no into here, 10% directly you tell me. How much is the amount you get? 20,000 rupees. And what about the machinery 2? 80,000 was the price of the machinery. Have you used it for the whole year? No, you've not used it for the whole year. You used it for how many months? You've used it only for 6 months. So how much do you get? 10 by 100 into 6 by 12? 4,000. So what is the total depreciation for the year? It is 24,000. Can you tell me what is the book value by balance carried down? What is the book value of both the machineries? Very good. 2,56,000. This is 2 lakh. This is not 20,000. Okay. Someone said 76,000 is the book value. Don't do mistakes like that. All right. Now for the next year, guys. For the next year, is there any transaction in the next year? 2016, is there any transaction? No, sure. There is no transaction for the next year. So we have to just calculate the depreciation directly. Can someone tell me what is the depreciation for this year? We have to calculate which method are we following, original cost straight line method, or are we following the WDV method? Straight line method. Straight line method means on what should we calculate the depreciation? On what amount should we calculate? The cost, the original cost of the asset. So have we used both the assets for the whole year? Yes, we have used. But we will write over here 2 lakh into 10 by 100, that is 20,000. And on the machine 2, second machinery, 80,000 into 10 by 100, that is 8,000. So how much is the total depreciation? 28,000. Can you tell me the book value by balance carried down? 2,28,000. Wonderful. So to balance brought down, this is on 31/12/2016, 2,28,000. Now, is there any transaction in this year? Sorry, this is not 31/12. This is 1/1/2017, right? Yes. Is there any transaction in this year? Yes, sir. There is some transaction in this year. What is that? We have sold. Which machinery have we sold? The machinery which we had purchased for 1st January. We had bought on 1st January, whatever we had bought, that machine 1 is being sold for 1 lakh rupees. Can we calculate once? What is the book value of the asset? Is it profit or loss? Can we calculate it? Yes. This is working note 1. Calculation of profit or loss on sale of asset. Now, what was the first? We will calculate the book value. So, historical cost. What is the machine? 2 lakh rupees is the historical cost of the machine. Less depreciation for 2 years, right? Depreciation is the same. What is the depreciation for 2 years? That is 20,000 plus 20,000. 10% of this you charge depreciation for 2 years. You have written also machine 1, that is, so 20,000 and 20,000. So the depreciation is how much? 40,000 rupees for the 2 years. Should you charge depreciation for this year also? Yes, sir. We have to charge depreciation, but for how many months? Depreciation for 6 months. Till date of sale, that is you're selling on 1st July. So can you tell me what is the depreciation for 6 months? 2 lakhs into 10% into 6 by 12. How much do you get depreciation amount as? 10,000 rupees. So what is the book value on the date of sale? Is it 1,50,000? Is it a profit or loss? Is it a profit or loss? What do you think it is? Very good. Profit or loss is equal to sale value minus book value. The sale value was how much? Given in the question as 1 lakh. What is the book value? 1,50,000. So it is a loss. The book value is more. Loss of 50,000. Could you please tell me the journal entry also? We write the journal entry also, right? We have this habit of writing the journal entry also. So bank account debit. Bank account debit. How much money did you receive in your bank account? 1 lakh. Should you debit profit and loss or should you credit profit and loss? What should you do? It's a loss. Loss means what? We have to debit profit and loss. Wonderful. Profit and loss account is to be debited with 50,000 rupees, right? To machinery account or the asset account. How much is the book value of the asset being sold? This is book value, 1,50,000. Let's just post these entries over here. Before that, we have to charge depreciation for how many months on that asset? For 6 months, you have to charge depreciation. So let's charge that depreciation also 1,717 by depreciation account. For 6 months, we're charging depreciation, which is equal to 10,000 rupees. We've already calculated it. But just for the sake of disclosure, we will do it over here again. 10,000. Then post those entries relating to sale by bank 1 lakh, by profit and loss account 50,000, by profit and loss account 50,000. Now, have you bought a new machinery? On the same date, another machinery was purchased for rupees 30,000 and was installed on 30th September 2017. Now, the date of purchase and the date of installation is two different things. Can you tell me what should I consider? What should we consider for calculation of this? The purchase date or installation date? I'm getting mixture answers, but most of you are saying the installation date. Yes. Now look at this. There are two views about this. Okay, one person mentioned, I think Sri Harsha mentioned, sir, we should record the asset when we have purchased it, right? Yes or no? We have to record the transaction when we have purchased it. When was it purchased? You can't wait for the asset to be installed to record it in the books. So you have to record it in the books on the date of purchasing it. When was it purchased? It was purchased on 1/7. 1/7. So the entry will be from the date of purchase. I mean, on the date of purchase only we have to record it to bank account. How much is the amount of the asset? What is the value of the asset? 30,000. Now, with regards to depreciation calculation, there are two views. You can give a note, but I would say installation date is better, right? Because you are going to calculate, I mean, you're going to start using that asset only when you have installed it. So that is when you're actually taking the benefit of that asset. The benefit of the asset is derived from the date of installation of that asset. So that is why depreciation will be calculated from the date on which the benefit we're deriving, on the date on which you're deriving the benefit. From that date, we're going to take it, Prithvi. So when is the, how many months should we charge depreciation for this year? On that particular asset. On that particular asset for 3 months. Okay, for 3 months. Wonderful. So here I'm going to charge depreciation by depreciation account. We have machinery 2. Can you tell me what is the machinery 2? First, machinery 2. What was the value of that machinery 2? 80,000 rupees into 10%. Is it used for the whole year? Yes, it is used for the whole year. So 8,000 rupees. And on machinery 3, the one which we just purchased, how many months is it used for? 750 you get. How did you calculate it? 30,000 into 3 by 12 into 10%. Okay, 750. What is the total depreciation? 8750. Can someone tell me the book value of the asset? 89,250. What is the total? 2,58,000. 2,58,000. The benefit is derived from the date it has been used, Harsha. So we have to charge depreciation from that date. Okay, so to balance brought down, how much is the balance brought down as 89,250. Now in this year there is some change, right? In this particular year we have changed something. What have we changed over here? What have we changed over here? We have switched over from straight line method to which method? WDV method. From the straight line method to the written down value method, we have switched over. Now, could you tell me what should I do? We have to directly calculate. Is there any other transaction in the year? No, there's no other transaction in the year. So directly calculate. Now prospectively means directly calculate on the book value as at the beginning of the year. Prospectively we are saying. So directly calculate on the amount of the book value. How much is the book value of the asset? 89,250 directly calculated. So what if it was retrospective? Retrospective, if it was, we had to draw a working note and all, and we had to calculate retrospectively from the beginning what would be the impact, what would be the book value. We would have to calculate like that. But over here, not required because they have not asked retrospectively, and for exams also not expected. I mean, it will not come for sure. So 89,250 into 15%. Can you tell me how much is the value? 13,388. And what is the balance? 75,862, is it? 862. Same thing. What if it was WDV to SLM? Same thing. We have to follow the same thing over there also. On the book value of the asset, just prospectively change it. No. Even if you change, if you write it separately, the answer will be same. Someone is asking, sir, should I separate 89,250 book value for book value for this one for our asset machine 2 and machine 3? Should I change it? I mean, you don't have to show it separately, simply because it's going to be the same, 13,388. Okay, next year also we'll just calculate what is the balance. What is the depreciation for this year? What about the next year? People are asking me, what about the next year? What should I calculate? How should I calculate depreciation for the next year? They have not asked. But if they have asked, 15% on written down value. What is the written down value? 75,862 into 15%. How much do you get it as? 11,379. They have not asked. This is Adhika Prasanga, but this way. Next year, again minus this and find out the book value, and you calculate on 64,000. I think you get right, 64,483. On this, you will calculate depreciation for the next year. Now we are following this particular method, that is written down value method. Have you followed this? Yes. That's it. We are done with depreciation chapter. Congratulations. How many homework problems do we have? Just 2. No, there are many. I've given many homework problems. 3. Okay, not many, 1 extra. 3. Yeah, ledger accounts you have to draw in a couple of places. I'll discuss the answers I have discussed already the answers, right? For a couple of questions, I already discussed the production unit and all I have discussed. This fourth question is very interesting. Fourth question, if you're able to do, you are good in whatever you've been doing, for sure. Fourth question, I would love if you do it properly. I'll discuss the answer, doubt session or something. We will discuss the answer over there. End answer, I'll tell you what the answer is. Okay, can I start the new chapter? Can we go to the next chapter? Which chapter did I tell I'll discuss next? Consignment accounts. My personal favorite, yeah. Yes. I'll come back to inventories when I do sole proprietor. With inventories, I will discuss inventories over there only. Just before I start sole proprietor, we will discuss it over there only. Sale of goods act, we will do act. Sale of goods on approval basis. Soon after consignment, we will do it. Shall we start? Okay. Now this is a sure shot question for 10 marks. I'll just show you the way they have been asking from here. The question. This is the 9th chapter in our index. So they have been asking 10 marks consistently. One of the attempts they did not, but your attempt for sure 10 marks minimum. This attempt, there was deleted chapters worth 27 marks worth questions had come. So that is why it wasn't asked. It wasn't asked in that attempt. So I did not do provision for depreciation method. You can just have a look. It's not a different depreciation method. It is just about accounting for provision for depreciation. Please have a look once from the textbook. If you have any questions about it, come. Then only when we sell the asset, we have to be careful. Okay, I'll discuss the entries quickly for provision for depreciation. Good, you reminded me. Guys, provision for depreciation quickly. I will have a discussion. Okay. Thank you, Kishan, for reminding. Okay, provision for depreciation. Quick discussion within 5 minutes to finish this. This is not a different method for calculating depreciation. This is just, accounting for depreciation is a little different. Are you all listening? Say hi, hello once. I'm feeling very alone types. Yes. 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 All right. Now let's start. Okay, you're there. Rajat. Where is Abhay? Abhay is there. Abhay. Okay. Abhay slept off. Okay. Now, provision for depreciation. We're going to discuss. What about this provision for depreciation, sir? How does this work? Provision for depreciation means it's an accounting way. It's how we account for depreciation. What was the journal entry for depreciation? I told you that time when I was discussing here. The first, example I gave you here. How was it happening? How was it working out over here? Every year we were discussing. We were distributing the depreciation directly from the asset account, right? Every year the depreciation was moving away from asset account to the profit and loss account. Every year like this, we were reducing the cost of the asset. The book value kept on reducing every year like this. Now, this provision for depreciation method doesn't work like this. Under the provision for depreciation method, what we do is we don't minus anything from the asset account. The asset account will be intact. The cost of the asset will be intact. We will not touch it. Rather, depreciation, whatever we have to charge is depreciation. We will calculate minus figures and keep it somewhere. We will minus, we will book a liability, we will open the liability account, which works as a minus in this asset. Directly, we're not going to touch the asset account. Are you all following? Listen to me very carefully. Directly, we're not going to minus it from the asset account. We are going to open a separate account, which is going to be credited every time we charge depreciation, and we're going to show this as a minus from the asset account in the balance sheet. For example, this means that now depreciation is not going to be charged. We're not going to charge depreciation to the asset account. Depreciation account is not to be charged to the asset account. It is to be charged to an account known as provision for depreciation, or this account is also known as accumulated depreciation account. So every year when we purchase, when we have to charge depreciation, this is the entry we book. We don't credit the asset account. Generally, we credit the asset account and we reduce the value of the asset. Yes or no? Yes. We reduce the value of the asset. But over here, we are not doing that. We are not crediting the asset account. We are crediting a liability account. You can look at this as a minus an asset. The nature of this account is minus an asset. This method can be followed by anyone. It is a choice. It is a choice of disclosure. You can use it whenever you, if the company feels they want to show this method, they can show this method. If you show this method, the advantage of this method is in the balance sheet. When you look at the balance sheet, you will look at the historical cost. You will know the historical cost of the asset. The advantage is this of this particular method, because a user of the financial statements will get to know what was the cost of the assets that was purchased by this particular entity. So that is one advantage of this method. What is there's nothing like disadvantage, but when there is a sale of an asset, you have to transfer. You don't get the book value directly in the asset account. When there's a sale of an asset, you don't get the book value of the asset directly in the asset account. You can't pass entries directly to the asset account when there is sale of the asset. You have to draw an additional account known as asset disposal account. And in the asset disposal account, you have to transfer the historical cost, the depreciation amounts, and calculate the book value of the assets. This is just for calculation of book value. You have to draw a special account when the asset is being sold. So there's some additional clerical work when the asset is being sold. Are you following this? Yes. Now, every year we're going to charge depreciation and everything else remains the same. Do we close the provision for depreciation account every year? Do we close it? No. It's a liability account. The balance is carried forward from year on year. Every year the balance is carried forward. For example, in that case, in that scooters case, I will tell you what is the amount of depreciation we had calculated. 10,000 rupees was the amount of depreciation we calculated. So for the first year, what is the amount of depreciation? Depreciation account debit 10,000 to provision for depreciation account 10,000. Depreciation account is closed. How do we close depreciation account? It's an expense account. It is to be closed by transferring the balance to P&L account. So that is closed. Now, when you purchase the asset, what was the entry? I'll just write the entry for purchase of asset also. What was the entry when you purchase the asset? Bank account debit to, or rather, sorry, asset account debit to bank account. Asset to bank or cash. How much did you purchase it for? 60,000 rupees. You purchased it for 60,000 rupees. So these are the entries we pass. Now, can you tell me what is the value or what is the balance in the asset account? How much is the balance in the asset account? Because of these three entries, can you just tell me the results of the balances, different balances? Asset account, how much balance is there? 60,000. Debit balance or credit balance? Debit balance of 60,000 rupees. Wonderful. Depreciation account. What balance is there in depreciation account? Is there any balance in depreciation account? No. You debited it, then you credited it. It's a nominal account that's closed at the end of the period, so it will have no balance. Provision for depreciation account. Is there a balance? Yes. What is the nature of this balance? Debit balance or credit balance? Sir, it is credit balance. Of how much, sir? Credit balance of how much? 10,000 rupees. Now, how we disclose this is, do you remember there is something called as provision for doubtful debts? How do you show provision for doubtful debts in the account, in the balance sheet? How do you show it? You show it as a minus. That provision also will have credit balance, okay? You show it as a minus from the debtor balance. Very good. You show it as a minus from the debtor balance. Over here also, we are going to do the same thing. In the balance sheet, we're going to write asset, that is machinery or whatever it was. It was a scooter, right? So we're going to write scooter. Inner column, we will write 60,000. The cost of the asset, debit balance of 60,000, the scooter value was, minus provision for depreciation or accumulated depreciation also we are doing. Yeah, I'm giving example only, Pawan. So what is the amount? What is the cost of the asset? I mean, what is the book value of the asset? The book value of the asset would be 50,000 rupees. So the book value of the asset is 50,000 rupees. It is shown same way. If it was the normal method, what we would have done, if it was a normal method, instead of charging to provision for depreciation, you would have charged to which account? Asset account. Asset account would have had direct balance of how much? 50,000 rupees only. You would have reduced 10,000 rupees over there, you would have credited, and the asset account would have had a balance of 50,000 rupees over there directly. But here it's not like that. Here you are going to show a provision. But the book value of the asset is not going to change. Anything is not going to change. It's going to be at 50,000 rupees only under this method also. Just that you have one additional method. I mean, additional account, one additional ledger account is there. What I would advise you to do is go look at the material, your class material or the textbook, take out a provision for depreciation account problem and just look at it once. And if you have any questions, you can ask me. It's not a separate, just these journal entries you must be knowing. And while we are selling off the asset, we open an account known as asset disposal account. Now, what is this asset disposal account? This is a mini asset account. Whatever is the cost of the asset is transferred over here. Can you tell me where is the cost of the asset? Where did you keep the cost of the asset? In that case, scooters account, you're selling that scooter account. You're selling that scooter, let us say. Where is the, after 1 year, you're selling of the scooter. So what we have to do is that scooter account has a balance. How much is that balance in that scooter account? 60,000 rupees is the balance. Debit balance or credit balance? It is debit balance of uh, 60,000. So it's an asset. It will have debit balance. So we have to transfer it to this account. So we pass an entry, asset disposal or scooter disposal account, debit to scooter account. So here we write to scooter, we just transfer that balance. We get it as 60,000. Now we need to calculate the book value. So where is the depreciation on the scooter? Where are we collecting the depreciation? Where is the depreciation being collected for this? It is being collected in the provision for depreciation account. So transfer it. After 1 year you are selling it, that means how much depreciation is there in that provision account? Only 1 year's depreciation will be there, which is 10,000 rupees. So the entry is provision for disposal account will have debit balance or credit balance. You already answered that question. Will it have debit balance or credit balance? It will have credit balance. So to transfer it, what should you do? You have to debit that account, provision for depreciation account to asset disposal account. We'll do one thing. You see it once and come. I will take one small question tomorrow morning and we will discuss one small question on this in the class. I've not added it in the material because it is not something separate, but we will discuss one small question on this just for my satisfaction. Okay. So it is 10,000. 10,000 we have transferred and we will transfer it over here. Like this. Can you tell me what is the book value of the asset now? In this account only the book value is present. What is the book value of the asset? 50,000 rupees is the book value of the asset. The sale entries pass through this asset disposal account itself. It's a very simple thing, but anyway, if you have not got control over the debit credit, you might find it a little difficult. So I will discuss it with the problem tomorrow. Okay, yesterday I told you BRS. I did not talk about how important BRS is. I'll just talk about both BRS and depreciation quickly and tell you what you have to keep in mind when you're solving problems. Shall we discuss this within 4 minutes? Let's start consignment at chart 4. Okay, first I will talk about depreciation. Now, depreciation, your focus should be mainly on calculating that profit or loss on sale of asset. Profit or loss on sale of asset calculation you have to practice, especially that mid-year sales will be there. So that time you have to calculate the depreciation for the mid-year, and you have to charge that depreciation to the asset account also. Don't forget to charge that depreciation to the asset account. Those kind of problems only have been asked in most of the attempts so far. They have been asking questions based on the profit or loss only. And but the tricky part over here is that 4 mark question which they give, the compulsory question, is generally a lengthy question. In fact, which we did, I think, was a 4 mark question, the question number 2. It takes a little more time to do this question. It can come for 4 marks, a question this big. That 20 marks question is always disproportionate. The time taken is disproportionate to the marks. The practical question, generally it is like that. So it might take some time. So practice as much as possible and know the steps in mind. Keep the steps in mind, what to do. Quickly you have to be able to do it. So have that hold over the problem properly, or hold over the question properly. It is not so difficult if you practice, if you do the problems. Do it from the ICA material also. ICA material also has some problems, so solve those problems also and get hold of it. Focus on this. Focus on SLM and WDV method more and more and more, because so far whatever practical problems have been asked from depreciation, that is around these many marks, 18, 20 marks, whatever they have asked so far, is from WDV or SLM method. For your attempt also, possibly it is from that only, but it can come from SLM the sum of years digits method also. There is a chance, there's a small chance over there also. And expect a question for 4 marks or something, 4 to 10 marks range from depreciation chapter. You can expect 4 to 10 marks range question for sure. If not the compulsory question, it will be, that is what I was telling you. See, either from here the compulsory question comes, or from here it comes, rectification of errors. But this is a sure shot question for your exam. In fact, all the chapters there is a sure shot question. At least 2 marks for true or false question will come, if not anything. And then about bank reconciliation statement, focus on adjusted cash book. Focus on adjusted cash book. I feel it's very important for our exams, adjusted cash book problems. So do the adjusted cash book problems properly, understand what comes over there, what doesn't come over there. So that is very important with regards to the BRS, bank reconciliation statement, adjusted cash book problems. Focus on that. And then routine adjustments, as I mentioned, for rectification also, there could be 1 or 2 adjustments which is a little tricky and a little time consuming to think. Think patiently, don't hurry, don't look at one adjustment and say it is difficult, it is not possible, this question is not possible, I will not be able to do this problem. Don't do that. There will be 1 or 2 adjustments like that. It will be a 10-mark question for your exam for sure again. So do not just switch off just by looking at 1 or 2 adjustments. You don't pass exams like that, you don't win battles like that. You have to fight it out. 1 or 2 adjustments here and there, even if you're not able to follow, just see what to do. If not, you don't understand only what it is, just guess, you guess something and you answer and come, that's okay. But attempt BRS problem, because at least 5 or out of 7 or 8 adjustments they generally give, 5 or 6 adjustments are going to be routine, like check deposited not clear, check issued not presented, bank charges, dividends. So whatever we discussed, out of those 15 adjustments I discussed in the class, you can expect each of those adjustments coming for your exams. So all those 15 adjustments which I discussed in the class, you remember we had discussed 15 adjustments in detail in the class. So focus on those adjustments. Do not by heart anything, understand the concept and look at it. So focus on those 15 adjustments properly, and it is possible. It is not so difficult. PRS is not so difficult. Only thing is, if overdraft is given, overdraft as per passbook, what will you assume it as? When overdraft as per passbook is given, you will take it as cash book positive balance. If overdraft as per cash book is given, what will you assume it as? You will take it as favorable balance as per passbook, as per PB. So just that one thing in mind, with that much knowledge, you can solve a BRS problem. So far we have discussed some very important chapters from the exam point of view, that is rectification, BRS and depreciation. Practical, I'm telling you, around 25 marks is covered over here only, and then here around 25 to 30 marks you can expect from this. Then theoretical framework and accounting process put together around 10 to 12 marks you can expect from both of these chapters. So total 35 to 40 marks we've discussed in the class already, and these are marks which are easily up for grabs. With little efforts, with little hard work, you can grab these 35 to 40 marks from we've just finished 5 chapters. We just finished 5 chapters. We just have to put little more effort than what we've done in the class. We have covered almost every concept in the class. I've not skipped anything. I'm not going to skip anything for most of the chapters. So we are covering a lot of things. So that is why I'm concentrating on just talking about, I'm just talking about this, because we have to cover a lot of things. So 5 chapters, around 40 marks, 35 to 40 marks, you can easily score. Don't look for just 35 to 40 marks. That's not our target. Our target is 75, 80, 85. That's our target. And it is possible. If you listen to me carefully, it is possible. But here we have secured, 100. 100 is our target. Correct. But here we have secured with just 3 or 4 days of discussion in the class and a lot of, not too much conceptual stuff we discussed, all basic stuff we discussed. We have secured 35 to 40 marks. Yes or no? Now, go practice once this is done. Sit and practice properly and secure that 35 to 40 marks, book it. Over that, whatever now we are going to discuss consignment, another 10 marks in our basket. Consignment, another 10 marks. Sale of goods, another 5 marks. 4 or 5 marks from that. Average due date, account current, another 5 marks each. So overall, there only we have around 55 to 60 marks in our pockets. What is difficult in accounts then? 55 to 60 marks is in our pockets. So then you have this partnership, NPO, or sole proprietor, which needs practice. There's no much concept. It's all about practicing, solving, and understanding what is the process and not wasting too much time in solving it. It's all these 3 chapters I believe are about practice. More about practice. Company accounts also easy marks to score again. If you know that about forfeiture, about reissue, it's easy. Journal entries, you can pass them. Around 15 marks questions can be expected from this particular chapter, company account. That also you will get in the class only. But these 3 chapters, I will tell you the concepts, but I can't solve 10-15 problems in the class. That you will have to do. I will solve 2 or 3 comprehensive problems wherever possible. You will have to work hard later on. You have to practice a little. I'm just giving you a disclaimer for these 3 chapters. I'll cover up the concepts, but you have to cover up the practicing part. Other all chapters, we will do everything in the class almost from the exam point of view, and we'll cover most of it. But these 3 chapters, you might have to do some questions. I will add some homework questions for you to do because it's time consuming. One question will take 1 hour, 1.5 hours to do if I'm doing it in the class. So that's a lot of time to spend on parts like that. But we will try to cover up how much of it is possible from that section also. But everything else, 10 problems, 8 problems, we are discussing in the class. Okay. Next, consignment. Shall we start? I want some energy. I want some reaction. Each one of you listening right now has to say, yes, sir, or jai, sir. Okay, anything. Okay. Consignment account. Now, what is consignment? First of all, let's understand some theory part today. Let's understand some theoretical aspects, which is very useful to solve problems. Without knowing this theory part, you will not be able to solve the problems. Okay. First, I will talk about What is this concept of consignment? Consignment means it's a business model. Okay, it's a business uh, model or business arrangement between a person called as the principal and his agent. Okay, between a business person who is a consigner or the principal, we call him the consigner, and the consignee, the principal and his agent. Now, what is this is? There is a person, let us take for example, I am over here. Okay, it looks like a skirt, right? Okay, all right. So here I am in, let us say, Mangalore. I deal with. Have you heard of this Mangalore bricks? Have you heard of Mangalore bricks? Mangalore is very popular for those kind of bricks back then. Now it's not so not used so much. Yeah, red bricks, Mangalore bricks, uh, like the tiles that they put over the you know, the roof, the old houses you see. Now I am a dealer in Hanchu, correct, Hunch, correct. I'm a dealer in Mangalore bricks. I sell all around Mangalore, but I want to expand my business and I want to start selling them, let us say, in uh, somewhere in Uttara Kannada. Anyone from Uttara Kannada over here? Uttara Kannada district over here? Do we have anyone from the Uttara Kannada district? Which location? Which location in Uttara Kannada district? Okay, let us say I want one proper location. Ha, okay. Let's take Manoj. Manoj is from Sirsi, it seems. Manoj is from Sirsi. So I will tell Manoj. Manoj is from Sirsi with shorter hands. So Manoj is in Sirsi. Okay. Now I tell Manoj that, look, boss, I will send you some tiles. Let us say 1,000 tiles. I send only 1,000 tiles. I'm going to send to you. The bricks, 1,000 Mangalore bricks. I'm going to send to you. You have to sell these tiles in Sirsi. What should you do? You have to sell this in Sirsi. Now Manoj will tell me, okay, I will sell it to you, but what is the condition relating to this? How does it work? What am I going to get? What am I going to earn? What are you expecting and all that? I tell him clearly that, boss, look, you have to sell 1,000 tiles. For this, you have to incur some selling expenses. There will be some advertisement you might have to do. That also I will give. All the expenses I will incur. Whatever expenses you're going to pay, whatever expenses you're going to pay, I will refund it to you. You're not putting anything from your pocket. This is an agent. This is a relationship known as principal agent. This is a legal relationship between me and him, which is known as principal agent. So in this principal agent relationship, what happens is the principal is telling, not principal, okay. Principal is telling the agent that, boss, don't worry about any expenses. Everything will be reimbursed to you. You're not putting anything from your pocket. All you're doing is you're just putting efforts to find customers. You have to find customers. You have to put efforts to find customers. You find customers for me, you give me customers, you sell the goods to them. That's your job. For this, finding the customers, what I will give you is, I'll give you a remuneration for finding the customers. We call this as commission. So commission will be based on sales. Commission will be based on sales. So I will give you something called as commission on the sales that you have made for me. I'll give you this commission. So he will say, that means now, Manoj is telling me, that means now I am not going to get any part of your sales income. No, obviously not. Whatever sales income you are receiving, whatever sales money you are receiving, please transfer that money to me. Minus all the expenses you have incurred, minus all the expenses you have incurred, all that you minus, minus your commission, a net amount of the sales must be transferred to me. This is what I'm saying. For example, let us say 1,000 tiles are being sold at 10 rupees per tile, just 10 rupees. How much is the total sales revenue? 1,000 tiles into 10 rupees, 10,000 rupees is the total revenue. In that, let us assume his remuneration is 500 towards commission. His commission is 5%. 5% means 500. 500 is his commission. Then he has incurred some expenses, small expenses he has incurred, which comes up to 300 rupees. So total money, how much did he receive on my behalf? He received 10,000 rupees on my behalf from the customers. How much expenses did he incur? 300 rupees was his expense and 500 rupees was his commission. How much will he remit to me? How much will he transfer to me? Will he transfer full 10,000 rupees to me? No. He will transfer to me how much? 9,200 rupees. He will transfer only 9,200 rupees. Are you all following? Okay. Now, a couple of things I will discuss over here before we, some legal aspects about this transaction I will discuss. Now, when the principal is sending the goods to the agent, there are some agents called as job work agents also. I think I've shown this to you. I don't remember. Okay, I'm not sure. I was reading this. I've been reading this financial statements for some time. So I'll come back to this financial statement only. This is known as a job work agent. Okay. This company is Hindustan Foods Limited. This is a company based out of Goa. I mean, original office was in Goa. Then they are in multiple places now. What they do is they have some principles. They have some, for example, Camco. If you don't want to think about this, you have heard about this company called Camco, right? Camco Cooperative Society, which is based out of Puttur. They have their head office in Mangalore. So what does Camco do? What does Camco do? They manufacture chocolates for Nestle. They manufacture chocolates for other brands also. Some newer brands, they manufacture chocolates that Love It or something you have, no, LUVIT. They manufacture chocolates for them also. So what these guys do is they send whatever raw material is required for the manufacturing. The principal sends it. That Nestle is the principal. Nestle sends the manufacturing whatever goods is required sometimes to manufacture. Then the manufacturing happens. Camco is just an agent. We call him as a job work agent. He does the job work on that particular goods, and he sends the finished products back to the the principal. So that is not selling agent, that is manufacturing agents. These are known as manufacturing agents. This Hindustan Foods Limited is a manufacturing agent. What Hindustan Food Limited does is they take raw materials and all that required for whatever is the end product. Like for example, they have a factory in Mumbai. They produce leather shoes and sandals in Mumbai. So when they produce these shoes and sandals over there, if it is for a particular brand, see, they have brands like E-Spirit, Saks, Fifth Avenue, Dune. So these are various brands. These are not their brands. These are different companies. These are not their companies. It is not their brand. It is not owned by Hindustan Food Limited. These are different companies. So these companies come to them and tell them, we want some, you have to manufacture. It's not franchising, it is outsourcing. They're outsourcing manufacturing. So they might give this leather required and all that. The principal supplies the leather and all that required for it, the shape required for it, the design required for that, all that, the manufacturer is telling. In fact, I think, have I taken this example in the class? No, right? Hindustan Foods Limited? I don't remember which class I took it in. Okay, I have, is it? Not shoes, okay. They manufacture also this. I told you in the Goa factory, they're manufacturing puffcorn for Kurkure puffcorn. For PepsiCo, they manufacture it. For Marico, they manufacture some of the items, in their Goa factory. So when they do this, what they do is the raw material required for manufacturing of these products are supplied by the generally supplied by the principal. Sometimes we only procure this company only procures, but most of the times the ingredients required is procured for them by the principal. The agent, all he does this part, the manufacturing part, the packing part, the branding part, all that they do, and they give it back to the principal. So this is manufacturing agents. But in consignment, what we're talking about is we're talking about selling agents. There are different types of agents. There are something called as buying agents also. Buying agents are persons who buy goods for me. For example, now I want certain kind of you have this some kind of mini forest products. Mini forest products means tendu leaves and all that. You get some kind of which is grown in forests. Generally, this happens in these regions in the northeast. Northeast tribal people do it. Okay, these mini forest products and all are procured by these tribal people. Even for cotton and all that, most of the times there's one more company called, I was studying one more company called Himmat Singh Sida. I mean, that's a very weird name it has, but this company, Himmat Singh Seed. So this company is into cotton. Basically what they do is the home textiles we call, or home linen we call. So in this home linen, they don't sell in India. 80% of the sales is in America. But what they do is in India, they procure this cotton and all that. It's an Indian company. They procure all this cotton and manufacture these different kind of bath towels and home linen items and supply it in America. Now, you have to get these kind of raw material consistently. You will have something called as buying agents. You will have buying agents to buy it for you and to transfer it to you. So you have different types of agents. But in consignment, what we're talking about is a selling agent. What are we talking about over here? We're talking about a selling agent over here. So consigner is appointing a selling agent who is known as a consignee. All his job is to find customers and to sell my products to the customers in the region he is in. So this is what he's supposed to do. Now, some terms of agreements relating to this. What is the consignee's revenue? This person is known as the consignee. Okay, the agent is known as the consignee. The principal is known as the consigner. The principal is known as the consigner. First, tell me, what is the consignee's revenue? What is consignee's income out of this deal? Commission. When I send the goods, when the consigner is sending the goods to the consignee, is he transferring the ownership of the goods? Is he transferring the ownership of the goods, or is he just merely transferring the possession of the goods? What do you think? He's just transferring the possession of the goods. He's just transferring the possession of the goods. The consigner is not changing. The ownership of the goods is not transferred from the consigner to consignee. Only the possession of the goods is moving. It is like you going to a renting house. You take a house on rent, you go there and stay over there. You take your property, you take your TV, you take your laptop, you take your cot, you take all these things to that place and you go. Does it mean that the landlord has got all those assets now? Your washing machine, your fridge and all you're keeping in his house. Does it mean the landlord owns it now? No, it's still yours only. You're the tenant. You still own it. Merely possession is transferred to his property. To his property, he owns the place. He owns the building where you stay. In that washing machine and all you have kept, that is yours. TV you've kept, that is yours. You just kept the possession over there. So that doesn't mean that you have transferred the ownership to his name just because you're keeping those goods in his property. So same over here, the consigner is transferring the goods. He's transferring the possession of the goods. That doesn't mean it is becoming consignees. Can the consignee use that goods whenever he wants to for whatever he wants it to? No. It is for a specific purpose. He doesn't have any right over those goods to use it for his personal purpose and all. He can't do it. Only for sale he has to use it. Is this clear? Have you understood so much? Okay. So my question is, risk attached to the goods is on whom? Whose is the risk? There are some risk attached to the goods. Something might happen to the goods and all that. Is it with the consignor or is it with the consignee? Who has the risk? It is with the consignor only. It is with the consignor only. When does the risk go off the consignor's head? When is the risk transferred from the consignor, and to whom is it transferred? It is transferred to the customer. The selling agent, the consignee will find customers, right? So it is transferred to these ultimate customers or the end customers. The transfer of risk happens. Till then, the risk attached to the goods is with the consignor itself. It has not changed. I hope this is clear to all of us. We have understood this concept. Wonderful. Okay. Now, some silly questions I'll ask. Some silly questions. When I send the goods in the truck, there's an accident. The goods are lost. Whose loss is it? Consignor's or consignee's loss? It's consignor's loss. It is consignor's loss. Why? Because the risk attached to the goods is with whom? Consignor. Some goods are lost in the consignee's go down now. Some goods are lost in the consignee's go down. Whose loss is it? It is still the consignor's loss only. Whatever happens to the goods, wherever anything is happening to the goods, whose loss is it? Always the consignor's loss. Always the consignor's loss. It doesn't matter where you're losing it, it is always the consignor's loss, because the ownership, the risk relating to the goods, have they been transferred to the consignee? No. The risk relating to the goods have not been transferred. The consignee sells the goods on credit to customers. There is the risk. When you sell on credit, what is the risk involved? When you're selling goods on credit to the end customers, the consignee also might sell the goods on credit to his customers. There is a risk attached in such credit transaction. What is the risk attached in credit transactions? Bad debts or non-payment. Very good. Non-payment or bad debts is a risk attached in credit sales. Whose risk is this? Again, it is consignor's risk. It is consignor's risk. Because consignees, it is not consignee's goods at all. It is not consignee's goods at all. So consignee is selling the goods, but it is not his goods. So whatever risk is attached to even the payment, non-payment, whatever it is with the consignor itself. Consignor has not transferred anything in ordinary course. That is normal cases, no. Now we will come to the point relating to commission. We have in commission, I told you what is commission? Commission is the income of the consignee. Commission is the income of the consignee. Commission, we have three types of commission. How many types of commission, guys? Three types of commission. First one is the ordinary commission. First one is the ordinary commission. This is always paid. No matter what, this is always paid by the consignor to the consignee. It is calculated as a percentage of total sales. Total sales here means that cash sales plus credit sales. Cash sales plus credit sales as a total percentage of total sales, we calculate this. This is ordinary commission. Are you all clear on this? Yes. Second type of commission is known as del credit commission. We have a second type of commission which is known as del credit commission. Why is this commission paid, sir? What is the feature of this commission? The feature of this commission is when you are paying this del credit commission, the risk of bad debts is transferred from the consignor to the consignee. So I told you earlier, 3 minutes back, I told you that bad debt risk is with whom? Who's going to bear the bad debt risk? Generally, consigner. But if the consignee is told that, boss, I will give you additional remuneration, I will give you additional commission, take the risk also from my head, because see, I can't control whom you are selling these goods to. You're not going to ask me and sell goods on credit. You're going to sell randomly on credit. So I don't have control over whom you're selling to. I can't check credibility of those customers every time. So you only take that risk. Bad debt risk also you only take. You only bear that risk. I might tell my consignee. But the consignee will tell, to take the risk, I need some additional remuneration. And that additional remuneration is known as what? Del credit commission. And then you have a third type. I will discuss all this tomorrow again with examples, with some numbers. Third type is overriding commission. Why is overriding commission paid? To encourage the consignee to sell goods at a higher price. So here, what we tell the consignee is, boss, I'm going to tell you a specified selling price. I will tell you to sell the goods at 200 rupees. But if you sell it at a higher price, you will get additional commission. You will get additional commission. You can sell, you have the freedom. This is known as specified selling price. I will specify a selling price, but if you want, you can sell it at a higher price. On that additional price, whatever you sell, you will get some additional commission, which is known as specified selling price. So this is the concept of three types of commission, which is ordinary commission, delicate commission, and overriding commission. All right, so I'll stop the class over here today. I should remember I'm stopping over here. About this again a little more with numbers and stuff. Thank you.
Thank you, sir.
Thank you, ma'am.
Dear students, once again, a reminder, you have a session at 6 o'clock, which will be streamed live only in YouTube. And later at 8 p.m., there will be law doubt clearing session, 8 to 8:30. So kindly attend these sessions and make the best use of it. Tomorrow's schedule is as follows. 8 o'clock, it is law. Then 11 to 1, it will be accounts. And again, 2 to 4:30, it will be accounts. So prepare well for tomorrow's session and also attend today's session without fail. See you all tomorrow. Have a good day.